Welcome to the FinGlam Finance channel. In this video, we will be reading and discussing some articles that we found very interesting. Feel free to leave a comment. Let's start reading the first article. The much anticipated and predicted Litecoin halving has finally taken place, a technological event that many have somewhat exaggeratedly attributed almost magical powers to, especially regarding its impact on ecosystem prices. This time, it's been Litecoin's turn, happening earlier than Bitcoin's upcoming halving scheduled for the next year. Interestingly, the price hasn't quite responded as expected, debunking the rather daring predictions from amateur analysts and last-minute speculators. So, what's the deal? Did something not go as planned? Or is the halving a more intricate process, interacting with other market forces? It's definitely the latter case, and it's time to delve into the situation for those who want to navigate the markets intelligently, holding their ground against the ever-present bullish temptations. Halving is a shared feature across many crypto networks and projects. It was initially introduced by Bitcoin and has been adopted by various other coins, following its broad setup. Halving essentially involves a process that slashes the rewards included in every mining block. In simpler terms, after a halving, the amount of freshly minted coins is cut in half, which should, in theory, reduce the selling pressure caused by new coin creation. This process is almost universally seen as a positive event for the networks undergoing it. However, when we look at Litecoin's price, which didn't experience any significant surge after its halving, it begs the question, what's actually going on? And, to be well prepared for the next significant halving, especially when it comes to Bitcoin, it's important to connect a few dots. There are several factors that anyone seeking to capitalize on halvings for profit should consider. These halvings are pre-planned and occur without exception, at specific block intervals. There might be minor variations due to the slightly random timing of block production for certain networks. But the markets generally anticipate these events, or in simpler terms, behave as if they've already happened. This behavior is quite typical in all financial markets. In the short term, at least, the reduction in newly issued coins is relatively insignificant compared to the overall market volumes. Consequently, this might not lead to immediate market effects. For Litecoin, we're talking about a daily reduction of less than $200,000, that's less than $6 million per month. These figures are quite modest, even when considering the not-so-high trading volumes during this period. Assuming historical events are indicative of future outcomes, which isn't always accurate, a much longer time frame needs to be considered for the halving effects to truly materialize. The reduction in inflation, under the same conditions, can certainly have its impact. However, we believe that its effects on LTC are lesser compared to those on BTC, where daily rewards, when measured in dollar value, carry considerably more weight. With foreseeable and predictable market events, it's unlikely we'll witness any abrupt or short-term movements. Everyone knows when the halving is scheduled, everyone prepares accordingly, and the markets account for this well in advance. This was the text of the article, and now we will be commenting on it. The long-awaited Litecoin halving has finally happened, and it's generating quite the buzz in the crypto community. Many people have hyped up this technological phenomenon, attributing almost magical powers to its impact on ecosystem prices. However, it seems that the price of Litecoin hasn't reacted as expected, disappointing some overly optimistic analysts and speculators. But let's not jump to conclusions too quickly. The halving process is a common feature in various crypto networks, inspired by Bitcoin's example. It involves halving the rewards for miners in each block, essentially reducing the amount of newly minted coins. This should, in theory, alleviate the selling pressure from new coin creation and be a bullish event for the network. However, when looking at Litecoin's price post-halving, one might wonder why the anticipated surge didn't materialize. The answer lies in the complexity of market forces and the fact that halvings are generally well-anticipated events. Market expectations are often priced in advance, resulting in less immediate impact than some might hope for. For those eyeing Bitcoin's upcoming halving, it's essential to connect the dots and consider various factors for successful market navigation. Halvings are scheduled, occurring at specific block intervals, with only slight variations due to block production timings. Therefore, it's crucial to take a longer-term perspective to observe the halving's effects properly. Litecoin's daily reduction in new coin issuance is relatively low compared to overall market volumes, impacting its immediate price response. While inflation reduction can influence prices, it might have a more significant effect on BTC than Lieutenant Colonel, considering the difference in daily rewards. In summary, don't be quick to judge the halving's outcomes. It's a complex event interacting with various market forces, and its effects may take time to unfold. So, let's keep a watchful eye on how the market reacts in the long run and make informed decisions while navigating these dynamic waters. Now we will read and comment on another interesting article. In this analysis, it is suggested that Bitcoin still has some short-term downside potential in its price, as its overall volatility remains at historically low levels. On August 3, Bitcoin experienced a dip below $29,000 due to concerns in the market regarding the major global exchange, Binance, which caused a negative impact on BTC's price. However, there was a slight recovery when Wall Street opened. Speculations about possible legal actions against Binance in the United States disappointed Bitcoin bulls after a brief surge above $30,000. Despite a stable trading range, experts predict that there could be a further bearish support retest. Some analysts warn that those who underestimate the bidirectional volatility may be in for a surprise. A well-known trader, Don Crypto Trades, sees the current BTC price behavior as a continuation of a familiar pattern. He believes that the longer Bitcoin's price hovers around a certain level, the more significant the subsequent move will be. While there have been concerns about Binance's solvency, CEO of analytics platform CryptoQuant, Ki-Young Ju, dismisses the panic and shows data suggesting that user balances on the exchange tell a different story. Overall, Bitcoin's volatility is at historically low levels, with weekly volatility heading towards record lows seen earlier in the year. This aligns with past comparisons to January, where Bollinger Band's data also mirrored the period before Bitcoin's Q1 breakout. According to Dylan Leckler, a senior analyst at digital asset fund UTXO Management, the 10-day realized volatility of Bitcoin is nearly lower than that of major U.S. stocks, bonds, and gold. This was the text of the article, and now we will be commenting on it. Bitcoin's current price fluctuations have been a topic of concern lately, and this analysis sheds light on its short-term downside potential. With overall volatility at historically low levels, BTC experienced a dip below $29,000 recently due to worries about Binance, the major global exchange. However, it managed a modest recovery upon Wall Street's opening. The uncertainty surrounding potential legal actions against Binance in the United States has disappointed Bitcoin bulls, as its price briefly crossed $30,000 but couldn't sustain the momentum. Analysts predict that there might be further bearish support retesting, and they warn against underestimating the bidirectional volatility, which could lead to surprises. Notably, trader Don Crypto Trades sees the current BTC price behavior as part of an ongoing pattern, anticipating significant movements following extended periods of price stability. Interestingly, some experts dismiss the panic over Binance's solvency issues, pointing to data that tells a different story about user balances on the exchange. This perspective contrasts with the prevailing narrative. On the whole, Bitcoin's volatility is currently at historically low levels, according to the Bitcoin Historical Volatility Index, BVOL. It's inching toward record lows, comparable to early 2023. The Bollinger Band's data also align with the period before Bitcoin's Q1 breakout, drawing comparisons to January's trends. Another noteworthy observation by Dylan Leckler, a senior analyst at UTXO Management, is that Bitcoin's 10-day realized volatility is nearly lower than that of prominent U.S. stocks, bonds, and gold. This comparison showcases Bitcoin's stability relative to other traditional assets. The cryptocurrency market is undoubtedly full of excitement and uncertainty. As investors and enthusiasts navigate these waters, keeping a close eye on the factors affecting Bitcoin's price remains crucial. The evolving situation with Binance and its potential legal challenges may continue to influence Bitcoin's trajectory in the short term. Stay informed, and let's see how the future unfolds for the world's leading cryptocurrency. These are the news that we found interesting. We are excited to share this information with you and create a community dedicated to financial growth. Let us know your thoughts in the comments as we continue to explore the vast world of finance together. Subscribe to our channel to stay informed and feel free to share and comment on all our videos. Thank you for your support. Attention! The information provided in this video does not constitute financial advice and is not intended to provide any form of financial guidance. The opinions expressed in this video are personal and may differ from those of financial experts. Any decision you make regarding investments will be your own decision. We do not intend to influence your decisions in any way. If you decide to undertake any investments, we recommend consulting professionals in the field. Before risking your financial capital, conduct your own research. Financial markets can be highly volatile, so if you choose to invest, do so with caution. It is important to be aware that financial transactions are often risky and can result in the loss of your entire invested capital. Never invest more than you can afford to lose. Past performance is not indicative of future results. Financial knowledge is essential. Be aware of your goals and abilities before investing. Conduct thorough research and verify sources before making financial decisions based on this video. In this video, we have blended finance-related images with other subjects. It's important to emphasize that the purpose of these visuals is to create a diverse and engaging content experience. We want to make it clear that there is absolutely no intention to offend, be sexist, or show bias towards any specific group in any way. Our goal is to foster a light-hearted atmosphere while discussing finance, ensuring a respectful and inclusive environment for everyone.